Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site in Times Square, New York City, we have Caleb Silver. He's the editor-in-chief over at Investopedia with a special presentation for National Financial Literacy Month. We are going to learn about trading, day trading, and long-term investing. It's great to have you with us as always, and thanks for joining us for National Financial Literacy Month. Really,
good to be here.
One of the most important times of the year for us.
We love it, and we think it's an all-year-round thing, but we're excited that April's the month of focus, so let's get into it.
All right, let's take a look at our first chart here, and the first question to ask, what is investing?
It's such a huge question, but it's an important one, right? Basically, it's the act of allocating funds to an asset with the expectation of generating an income or profit over a long time horizon. And the key there is time and expectation. So you're putting money into something hoping it will grow over time, but you have to have that patience, and that's where time comes in, and also risk.
All right, let's move along to our next chart here. When we think about what is trading, because when you watch the network, when you watch my show, when you go into all these number of websites and buying here, selling here, making all this kind of money, that's very different than investing.
Right. Trading is what happens throughout the course of the day, and it's what makes the market rise and fall or stocks rise and fall. And basically, it implies active and more frequent participation in the markets versus investing, which is that expectation for longer term returns that will grow over time. But this suggests this is very different from buying and holding. This is trading, looking for price mismatches in an asset, a stock, a commodity, the index itself. You're looking where prices are high, you want to try to buy to sell, or prices are low, you want to try to buy in and trade it. It has nothing to do with fundamentals. It's all about price.
All right, that's a key distinction there. Moving along to our next chart, and you get into a little bit more in depth here, long-term versus the day trading.
Right, so long-term investors like me, we buy and hold for the long term. We're looking at retirement or trying to grow income over time for an asset purchase. Maybe it's buying a home or sending kids to college. That's long-term investing, looking at a long-term horizon. Day trading is that price mismatch, trying to buy and sell securities when you think that there's a price imbalance and take advantage of that in the middle. If you think it's too low, you buy a stock here hoping it goes up, and as soon as it hits your price target, you sell it. Very different way of thinking about the world and a very different behavior by day traders versus long-term investors.
Let's go to our next chart here. What is market timing? And this is such an important topic right now. 2020 has certainly started to be a very volatile year in the stock market. So when you think of long-term investing, when you see your accounts move up and down with the volatility, market timing is so key, or perhaps the lack of not trying to time the market.
Sure. For long-term investors, for people who are in it for the long term, trying to time the market, finding out where the bottom is or where the top is impossible. Even the smartest people in the world can't do it right. You probably, like me, get a lot of questions. Are we at the bottom or are we at the top? Have stocks come too far? Have they sold off too much? That's trying to market time, and you're trying to minimize those losses or increase those gains based on when you think the markets are going to top or bottom. And it's a pretty dangerous game to do, but everybody tries to do it. For long-term investors, you have to resist that temptation and just hold on for the long term.
Because even institutional investors, professional investors, can't market time.
They can't market time, and they have the best computer algorithms in the world and the smartest programmers in the world. It's very hard to time the market when it's going to be at its top or at its bottom and find the right time to buy and sell. You have to pick an asset allocation strategy that matches your own risk profile. What am I trying to do over time? Am I trying to grow money over time for retirement or the asset purchase of a house or a car? You got to have that time horizon. You're never going to be able to find that perfect time to buy and sell.
All right, Caleb, great stuff as always. Thanks for joining us.
Thank you.
And thank you for joining me on Trade Talks for National Financial Literacy Month. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.